application successfully submitted. Look, here's the deal. You could do this the right way or the wrong way. And this is the crazy part about doing what I do is that most people get denied for loans, credit lines, and credit cards for reasons they should not be denied. It's not their credit score. It's not their income. They just mess up fundability. They mess up things on their application that if they just made little tweaks here and there, they would have already gotten approved. So today we're going to help fix that by mapping out the step-by-step guide to setting up for a successful loan application. All right. So before we dive too far in, if you want to discover all of the financing options available for you in 2023, make sure you register for our free masterclass on this at creditsuite.com/loans23. That's creditsuite.com/loans23. That event takes place February 14th, Valentine's Day. How awesome can that be at 1 p.m. Eastern? So make sure you register at creditsuite.com/loan23. Okay, so let's talk about relationship between application and approval, right? Because there's a big deal between applying for something and applying and actually getting approved. So loan application affects your loan approval, what you put on there, how you fill it out. That's why if you don't do this correctly, you're going to get denied, not because you don't qualify, but just because you don't meet the basic sniff test that the lender actually has. So your application has to reflect all written and unwritten requirements. Some requirements are obvious and included in a list. Some are not written and lesser known. So what I'm saying here is that, look, lenders have requirements you must meet. Okay, and if you meet these criteria, you get approved. Oftentimes, you get automated approvals from the lenders. But if you don't meet this criteria, this is typically what will get you denied. So what we want to do is put together an application for success, not for denial. And that's all about really understanding these written and unwritten requirements. So that being said, application should reflect or include fundability foundation elements. We'll talk about this: financial statement data, business plan data, collateral and guarantors, credit history and credit score. Some of this is needed on some applications and not on others. Some is needed for all applications. So I'm going to decode this for you as quickly as I can today to make good use of your time and set you up for successful submission of applications that actually end up with approvals. And by the way, if you're just coming in, give me a shout out. Tell me where you're coming in from. I always like to give you a shout out back on the stream and just say hello, maybe even mention your name or your company name. So tell me where you're coming in from. I'd love to give you a shout out and say hello. So let's start with financial statements. So all statements have got to be accurate, and they need to include income statements, balance sheets, cash flow statements, and you want to basically use a professional if you can. So let's look at this. A lot of loans do not need financials. The most popular ones that do are SBA. So if you want longer term loans, lower interest loans like SBA loans, that really is when you're going to need these kind of documents like income statements, balance sheets, and cash flow statements. Other loans like PayPal, Square, Stripe, or if we look at just simple credit lines that are easy to get, or merchant cash advances or cash flow financing, that doesn't require a lot of these financials. What they're typically looking for there is just your bank account. They're just looking through your bank statements. And for the bank statement review, they're looking at things like, are you overdrawing the account? Do you have non-sufficient funds? Do you have a positive ending bank balance at the end of every month or a negative ending bank balance? Do you have more money going in the bank account than going out of the bank account? Do you have a lot of transactions or a few transactions? So this is just an idea and kind of a rough idea of what they're looking for on your bank statements. But again, the most important thing to know is this: when they ask you for documents, they're going to be scrutinized. Sometimes I see entrepreneurs get in this habit of just because they ask for something, you give it to them. And the problem with that is they're not asking for an income statement just because they want to see if you have one. They're looking for very specific things on that income statement. Okay, they're looking to see, basically, are you profitable? They're not looking for a balance sheet just to see if you have one. They're looking to see, do you have positive cash flow? Do you have money? Okay, so these things are being asked for a reason. They're not asking for bank statements for no reason. They're asking for them to see if you properly manage your bank account. So that's why I added this second thing here, that if you need a professional to help you with the financial statements, well, then go to creditsuite.com/tax hive. Okay, we've arranged for them to give you a free blueprint to tell you everything you need to know to save money on your taxes, and they can also help you with the preparation of those kind of statements. But the most important thing you need to know is that whenever the lender is asking you for documents, you should scrutinize those documents and make sure they reflect what you want to reflect before you apply. I'll give you a simple example. So we have in the past delayed application for a loan because we didn't like the bank statement the month before. We have not got a merchant account or a merchant cash advance because we didn't like our merchant statements the month before. We waited one more month to be able to get better of what we know they would look at. So this isn't uncommon. The idea is to basically look at your own documents and make sure they reflect what you want them to reflect. If you're negative in cash, well, then you probably don't want to apply that month and give them a balance sheet that shows that you're negative. If you're losing money every month and year, you might not want to show a quarterly income statement that shows that you've lost a lot of money that quarter. That's exactly the opposite of what they want to see. It's the exact opposite of why they're trying to ask for the income statement to begin with. So it's a good practice to review the financials yourself, make sure they reflect what you want a lender to see, and then only apply when it makes sense, because maybe a month later makes a big difference on what would actually show up on those quarterly or monthly statements. And this could be the difference between denial and approval. And hello from Dallas, Texas. Erica is in the house. Rochester, New York is in the house as well. Hey, I'm from North Philly. Own a grocery store named Marta Grocery here. I love that. Dallas, Fort Worth metro area is in the house. Dallas, Fort Worth Metroplex is in the house, and Atlanta, Georgia. Thanks everybody for coming in. If you give me your company name, I'll even give you a shout out right here on the stream. So let's talk about financial statements. As I mentioned, they've got to be accurate. We've got to make sure that we are submitting all the right documentation to them. And I've also given you insight on a financial or a business or a financial expert through TaxSight that can help you as well. So business plan. Now, again, this is not required in a lot of cases. It's typically required for larger loan amounts or SBA loans. And a lot of people come in and want $250,000, $300,000, $500,000, but they don't have some of this stuff. And this is the kind of stuff lenders are going to look for if you want better terms. So you have to keep that in mind. There's all kinds of financing like merchant cash advances. You can get $500,000 through merchant cash advance. Your term's 2 years. Your interest is 20-something%. So your payments on that would be, $20,000, $25,000 a month. But if you want long-term, low interest, low payments, that's when your better loans, your term loans, your SBA loans are going to want a lot of this stuff. So you don't have to have a lot of this stuff if you're just going for fast, quick, easy money, but that's typically expensive money. So if we want the better, low price, low payment money, that's when these things really come into play. So business plan should be detailed. Successful business plan includes market analysis, competitive analysis, financial projections. So you want to prepare a professional presentation. And there's something called Live Plan. I think it's Live Plan. And Live Plan is just like a quick app you can use to be able to build the business plan. And I've also done training just on this topic. You can go to youtube.com/credit suite, and I mapped out business plan, every single thing you need to have in a business plan. If you're going to prepare a pitch deck for venture capital, I've got a presentation that maps out everything there as well. But the basics that you need to make sure are included in a business plan is things like what your business does. How does your business make money? What are your verticals, they call them, or your revenue streams for the actual business? Market analysis, what does that look like? How big is the potential audience that you could serve? How many people out there are there that you could possibly reach to sell your product or service? Competitive analysis, what's going on with your competition? Lenders can't stand it when you say you don't have competition. Everybody has some form of competition, right? Even Uber has competition in the fact that there's taxi companies, even though they have a different model. And the financial projections, what are your current financials? What are your 1 year, your 3 year, your 5 year projections? What do you expect to have happen? Okay, so these are all the type of things that go in a good detailed business plan. Lenders, in cases like term loans or SBA loans, that you have a plan that they can actually bank their money on for you to be able to grow the business. Collateral and guarantors, very important. I talk about this a lot, and here's why. Because when so many people are looking for money, they forget about these two options, and these two options between them open up maybe 50 to 100 additional funding options for you. And what I mean by that is that you might not have collateral. You might not have stocks, bonds, 401ks, IRAs. I'll give you a simple example of this. Yesterday, I met with a friend of mine in my mastermind board of advisors, and she's an apartment syndicator. She raises money to be able to invest into apartment complexes, and the people she raises money from all get high rates of returns from when she goes and buys a property. And so what I said to her was, she said, look, I'm looking for more money to do this thing. I said, have you looked at securities-based financing? She's like, what is that? I'm like, it's where somebody uses stocks and bonds, and they get a low interest rate credit line they could use for what you're describing to be able to invest into real estate. But here's the benefit. They still keep the stocks and bonds invested in the stock market. So think of it like this. You have $100,000 in the stock market. It's still there earning whatever it's earning in the stock market. Now you leverage it a second time, get a credit line for 5%. And now all of a sudden you're using that to be able to fund these apartments purchases. She's like, that's mind blowing. It changes my entire business because now my ability to raise money is easier because now people could tap into stocks and bonds and 401ks and IRAs. Okay. So again, these things have a very valuable purpose to you. Maybe someone around you has equipment. Maybe around you has inventory. Maybe grandpa has an old backhoe that he doesn't use. Maybe someone around you has stocks, bonds, 401ks, IRAs. It doesn't have to be your collateral. It could be somebody else's collateral that you could actually pledge to be able to get this financing approved. So whenever you're thinking about getting money for your business, you want to think about assets you may have for collateral and assets someone around you may have. Because, hey, look, if my friends know I'm starting a new business, they know that I'm very good with running a business. And if I'm willing to jump into something and put my own money in, I can tell you I have a lot of people that would want to front their own money to get in as well. And it's way easier for me to say, look, pledge your stocks and bonds, give me a credit line, give me 25 grand, and I'll get you 5% ownership interest in the company, or I'll pay you 10% on the money that you're actually giving me. Well, they're borrowing it at 5%. They're getting 10%. That's just easy money for them, right? So it's easier way to get money from friends, family, potential investors as well. Then we look at guarantors. And a guarantor is somebody that maybe has good credit and you don't. So there's a great program called Credit Line Hybrid, for example, that you need good credit to get approved for. 150,000. I did, I don't know, $500,000 in approvals just at my mastermind the last 2 days because of people that needed that. I'm like, no problem. This is what you need. It's easy to get. And we got them approved for $500,000 in funding between a few people. So the point is that maybe you don't have good credit. Well, then you can use somebody else's credit instead. Okay, 50% of the clients we help with that program have bad credit. They're just relying on somebody else's credit to help them. So again, maybe it's a potential investor that wants to get a rate of return. Maybe you exchange ownership or equity in the business for letting them use your credit to be their credit to get a credit line. But the nice thing about a lot of these credit lines is they report to the business credit reporting agency. So you're building business credit at the same time. So some things to keep in mind, because when you're looking at term loans and especially SBA loans, you're almost always going to need collateral. Okay. And oftentimes you're going to need a guarantor if your credit's not good. So these are things to keep in mind if you're looking for longer term, lower interest loans. But at the same time, there are also easier ways to get short term money quickly as well. But so again, never forget about collateral or guarantors, and always remember that maybe 50 to 100 plus funding options open up for you when you tap into these kind of categories. So present collateral and guarantors to potential lenders on the application is something that's typically going to be needed. If you're going to need an SBA loan, you're more than likely going to have to make sure that you're actually adding, that you have some kind of collateral. And by the way, I had this conversation with the whole table. I don't know what happened. Sat down with about 15 of my friends, and half the thing was, just, I guess, a training session from me to them about getting money. And this is one of the things the guy said. The guy stood up and said, he said, look, I got an SBA loan. They want to collateralize my home. I don't want to do it because I don't want to collateralize my home. And I said, well, you don't have to do that. You know, the reality is that means your business doesn't have enough assets. Let's talk about assets you could actually rely on in the business. And come to find out, he had account receivables. And I told him how to use those as collateral to not use his home. In other cases, I told the story about how my home was used for collateral. And I found out that the reason they wanted it was because of judgments on my LexisNexis credit report that were not correct. And everybody, as we were sitting at that table, got their LexisNexis credit reports because, again, review those, update those, because when I got those judgments that were not mine removed, then I got approved without my home being used as collateral. As a perfect example, okay? So this is why you need to know about collateral and guarantors, and I've given you some tips to even get around using things like your home as collateral and ways you can use other people's collateral and guarantors to be able to get approved as well. Hey, Family Fed Music, thanks for coming in. And Mo Green, what's up? Thank you very much for coming in and saying hello. And as you can see, a little bit different for us today because I've got my host in here with me, dropping links and bombs in the chat and things streaming across the bottom of the screen. I'm telling you, it almost looks like we have our act together over here. I don't know what's going on. Okay, so credit history and credit score. Let's talk about that as well. Look, if you're going to come in and get an SBA loan, you need to know you've got to have good personal credit, and you need to know you've got to have good business credit as well. And actually, I hate to do this. I'm going to jump off screen for 1 minute. Sorry about that. I had people that were knocking at my door and not coming in until I got to them. So my apology. Technical difficulties. What can I say? So the bottom line is if you're getting an SBA loan, then you need to know that good personal and business credit are a must. You've got to have them. Now, if you're applying for other kind of financing, it might not be essential, but you need to know that it will help you get better terms and more money. So if I'm going to get cash flow financing, revenue lending, a lot of people complain that the rate is so high on that. It's like 20%. I've got that financing with 8% because my credit was good. So you can get that financing with good or bad credit. It's even promoted that way. But the reality is if you have good credit, it helps you get significantly better terms. The same thing with business credit. You really can't get an SBA loan without business credit if you're an established business. You can get SBA loan as a startup if you have good personal financials. But again, the key here to know is that even equipment lenders will deny you because your business credit's not established or bad. And the other good thing to know is if you have good credit, personal or business, either one of those could be used independently to fund your business. You could just build business credit and use that to fund almost everything you need to get money for to grow your business. You could get good personal credit and get programs like Credit Line Hybrid, where just because you have good personal credit, nothing else, you're able to get $150,000 in financing. So there's multiple reasons you want to have good personal and good business credit, but the most important of which is because if you have good personal credit, then the nice benefit there is you're going to get better terms and more approvals, and you can use that and that alone to get financing. Same thing with business credit. Better approvals, more approvals, and you can use business credit alone to be able to secure financing. So if we can help you with business credit building, let us know. It's kind of what we do. And we can give you the fastest and easiest path where most people spend years to get done. Well, we can get done for you in just months. I need to get into real estate. My personal credit is tip-top shape, but I don't show very much income. X, that's okay. So let me give you a perfect example of what X is saying here. By the way, that is X's name is X on YouTube. I love that. That's the best ever. Okay, so you could get a program called Credit Line Hybrid. And you can go right here, actually, creditsuite.com/CLH to be able to get approved. And with Credit Line Hybrid, you could just get approved for 50, 100, even 150,000 just because you have good personal credit. You don't even have to show income. It's no doc. And a lot of our real estate investors use that to buy initial real estate. That's exactly what they do. Now, X, let me give you another option. It's called house reseller financing. House reseller financing, you can get 100% of the money you need to buy and rehab properties as well. That financing is especially for fix and flips. It's oftentimes called fix and flip financing. So those are two options where you're able to get approved even if you don't have strong cash flow, tapping into programs like House Reseller or Credit Line Hybrid to actually get the money you need. And a lot of people then use business credit to do the repairs and the maintenance of the property as well. Okay, so again, make sure that you work on consumer and commercial credit because it can definitely help you go through and be able to get your application set up the right way to get approved. Now, again, we can help you as well. If you want to learn more about what it takes to get approved, then you can easily get a free business financing assessment with us. And all you have to do is go to creditsuite.com/consult. That's creditsuite.com/consult, and we'll do a financing assessment with you. We'll do three things. We will actually do a fundability check to talk to you about everything about fundability that you actually need to get approved, that you actually need to be able to get approved. So we can teach you everything you need to know about fundability, where your fundability is off, what you need to fix to actually be able to get approved. The second thing we can do is we can actually help you with every aspect of business credit building. We'll give you tips and tactics. We'll get your business credit reports for you at no cost. We'll review those with you. And then we'll tell you all the financing as well. And the second thing you want to do is if you want to get more money, then go grab our free guide on 27 killer ways to get financing. And that's at creditsuite.com/27. So if you go to creditsuite.com/the number 27, that will actually give you access to our free guide on 27 killer ways to get financing for your business. And if you got value from this training, make sure you go to creditsuite.com/toolbox. And if you share our next trading, we give you about $400 worth of goodies that are all designed to help you get capital. And then don't forget on our main website, creditsuite.com, ton of info about business credit building, financing, offering them both of them as a service. And at the top right of our page, it takes less than 1 minute to like and subscribe on our social channels where we have daily tips, 1-minute tips, hour-and-a-half training, a bunch of details that you need as well. And then don't forget to go to creditsuite.com/loans23 to be able to get every legitimate financing option available for you in 2023 as well. Now, X says, hey, how would you establish business credit for real estate? Isn't real estate a high-risk sector? It is. Real estate's going to be very difficult to get financing for unless you're relying on a collateral-based financing or something like that. The nice thing about business credit is business credit, it doesn't matter if you're high risk. You're still able to get approved even if you're in a high-risk industry like real estate. Now, a lot of other financing like SBA loans, very hard to get in the real estate sector. Business credit, very easy to get. And even credit line hybrids, a very easy program to get, even if you're in a high-risk industry. So X, when I mentioned credit line hybrid, when I mentioned house flipper financing, when I mentioned business credit, I mentioned those specifically because those will work with you in your industry, and they are exactly designed to do what you're trying to do. So those are some of your best options. And you can also look into equity crowdfunding. Equity crowdfunding is a way, and there's a lot of platforms out there to be able to get money for real estate as well. So that's about 4 solid options to be able to get money for you and through real estate. And by the way, X came and said, here's my problem. And then we're answering the problem and giving him a handful of options that will work for him on the live stream. So keep that in mind when we are on these trainings. If you get in and take advantage of the comment section and just say, hey, what about this? Then oftentimes I'm able to actually answer your question and give you multiple options for your funding scenario right here. And somebody from Facebook says, hey, will there be a link for the information today? There will be. Whatever group or page you're watching this on Facebook, go back to that group or page and that video will be there for you. And don't forget to register at creditsuite.com/loans23 for all the best loans options for you in 2023. So thank you very much for tuning in. I look forward to seeing you in our next training. And don't forget, next Tuesday, you want to be at the live stream where we go over every legitimate loan option for you in 2023. I'm going to decode the entire thing. It'll be like an hour and a half. I'll even stick around for Q&As, but I'm going to go through every loan option available, what you need to know to get approved, everything you need to get max funding in 2023. We're going to do at creditsuite.com/loans23. Make sure you register there. We'll be live next Tuesday at 1 o'clock Eastern. Thanks for tuning in, everybody. Take care. Have a great day. Look forward to seeing you next Tuesday, February 20th. No, that's not February 23rd. What is next Tuesday? February 14th at 1 o'clock Eastern, Valentine's Day. I should know that. Where we'll be talking about all the loan options available for you in 2023. Thanks for tuning in. Take care. Have a great day.